Welcome to the live stream. It is Sunday, November 30th. This is the last day of the month, and we're moving into the month of December starting tomorrow, and we will see how December treats us. I can tell you this past week, if I get treated like that often, I would be very thankful. In fact, one more thing to add for the thanks that I have on this Thanksgiving week. The market really had a great rally over the course of 3.5 days. Monday was great, Tuesday was great, Wednesday was good, Friday was good. All of it was about a more than 4% rally on the S&P. So it was a really nice week. And it might be a little bit of a jumping off point heading into the month of December. I certainly hope so. It'd be nice to see stocks rally for the remainder of the year. I'm sitting on really nice gains, and it would take a lot for my performance to underperform the S&P. In fact, it would be an absolute crash. So I don't think that's going to happen. I am up more than 33% year to date on my stocks, and would like to end even higher than that for the rest of the year. This past week, it looks like Broadcom had a really nice rally for the week. I'm looking at the 1 week heat map. Google had a good week. Meta. How many of these analysts, these experts were doubting Meta? Oh man, these guys are just screwed up and are worth selling. Well, it became a nice opportunity, and I bought shares. I don't know if you guys did, but I'm good with the market discounting a super valuable company like Meta. So I took advantage of that. Tesla picked up a bid. Amazon caught a nice bid. I bet Amazon's selling a lot of stuff on their website right now with Black Friday and then Cyber Monday coming up tomorrow. Overall, I just think Amazon is dominating the retail space. They are number one in cloud infrastructure and just a terrific stock. I've been accumulating Amazon because I think it's just going to be worth more in the future. So the semiconductor space all caught a bid with the exception of Nvidia, and that's becoming an interesting stock, I must say. It's an interesting stock because the market's beginning to doubt the great Nvidia. I just shake my head and go, how could the market doubt Nvidia? That is just nuts. But if it's willing to discount Nvidia at a good rate, I'm willing to buy it. Why not? Why not buy the great Nvidia? And once again, the market at times is irrational, nonsensical. Discounting Nvidia, are you kidding me? Keep lowering the price and I'll buy some shares. I have no problem with that. So Nvidia did not participate in the rally this week. That is fine. Let's lower it even more, stock market. Now we'll buy it. Palantir certainly participated. Intuit sold off this week. That was interesting. I'll buy more shares of that. Uber did okay. Netflix rose nicely. Walmart, really expensive stock in my opinion. It went up almost 5%. Industrials picked up a nice bid. And you see how over the course of 1 week, a lot of participation. Every sector, you see a lot of green spots. Consumer discretionary, Home Depot picked up a bid. You see a lot of green here. Aerospace picked up a bid. The old school industrials like Caterpillar, it rose 4.6 for the week. So a lot of participation, man. It was across the board, nice and green. Consumer staples, a couple green spots there. Materials, nice and green. Utilities, real estate. Energy didn't do too hot, but I see a lot of green on this side. And healthcare even picked up a bid. Everybody except for AbbVie went up, and Merck went up a lot. Pfizer went up nicely. United Healthcare went up. And other small caps in healthcare did well. I know Oscar went up a lot this week. Beautiful. Love seeing that because I'm an Oscar stock holder. So the week was fantastic. And I think it's filling me with a little enthusiasm for the month of December because we had such a good week. We'll see if that holds true, or maybe if the market's going to play tricks on me and sell off. If it does, I'll look for opportunities to buy. No big deal. I've got some capital to work with. All right. So it looks like we've already got comments. Looks like Jeff is on. Thanks for coming on and for your comment. Yeah, I agree that Oscar was a great buy over the last 2 weeks. I mean, Oscar is not going to be a stock for somebody who just wants to set it and forget it. And as well as somebody who's going to be too quick to overreact to negative stories and stock volatility, because this stock is going to move. It is going to go all over the place. But if you watch what it did over the last 5 days, you are very happy with Oscar Health. Over the last month, I should say, it went about 33% higher from where I was trading on November 20th. So stupendous. Awesome. Keep it going, Oscar Health. Looks like the Elder. How you doing, man? You want to look at RMD and GRMAN. So I think that's Garmin. We can look at both. Good to see you. And hopefully you had a nice Thanksgiving break, enjoying some football today. It's been a nice long weekend, and we got to get our head in the game for stock investing this week. We're going to have a solid 3 weeks of investing, and then we're going to put we're going to be a couple of days on ice. We have the Christmas holiday coming up, New Year's Eve, and I think we're open New Year's Eve. But we'll see how things go. The market tends to rally higher toward the end of the year. I think we had a pullback starting October 28th. The S&P sold off and went down more than 5%. And it may have been a time when some investors took some profits. They took some money off the table. Maybe they took some losses and were, harvesting some tax losses that they could then pair up with some stock gains in the year of 2025. If that behavior is done, we should see buying into the month of December. That's my logic. We'll see how things play out. I don't think I have a futures prediction just yet, but we will see where it goes. There's good opportunity in the market. One thing I would say is it's good to see a lot of participation in the stock market, but I think that we could see healthcare have a sustained rally through 2026. Software have a sustained rally through 2026, as well as some of these industrials. I think the economy can begin with low interest rates, could begin to accelerate. Real estate could see nice conditions with low interest rates and rally higher. So I think some other industries may be a good idea, if anything, to diversify. We want to see these stocks continue to flourish. That's fine. But wouldn't it be nice to diversify? It's one of the principles of good, solid portfolio management. So that's what's happening there. Now, one thing I want to make everybody aware of, I've got a member program. Just real quick, there's a lot of members that come on the streams, and I really appreciate it. One of the perks you get is you can put stocks on the chat within a live stream, and I cover those stocks. The value investor level gets you to that membership, but then you can go from there. Like I just created a video covering technology hardware companies, and I'm going to release it to advanced members, and they get to see it for 30 days, and then I release it out to the public. These investors also get access to the model that I use to value stocks. They get access to the repository evaluations I complete. They get invited to member calls, invited to the Discord. A lot of good perks for this level. If you want to go even more advanced, you go to the super investor level, where I'll schedule a 30-minute call with you each month. I'll share my trades with you. I share my portfolio activity 2-3 times a week, as often as I think it's relevant, because I'm investing, trading adjusting my portfolio each week, and I share where I'm really putting capital to work. That level's a little more expensive, but for the investor that really wants to watch what I'm doing and take in all the research that I put out there on my stocks and take that into their process. I never provide investing advice. Really, what I'm doing is sharing all my research. I spend a lot of time each week researching stocks, creating videos, creating content. And I think I've got a good thing going because I think I'm providing value to people that want to be members, and they can take in that research as one more source of information on stocks. And then a platinum investor, if you're managing a sizable portfolio as an example, and you wanted one more analyst to maybe look at 3 stocks a month in detail, that'd be a level that you can consider. So take a look. If it's something good for you, it'd be great to have you as a member. Thank you for your time on that. All right, so let's get going on some stocks. It looks like we've got a couple requests. Let's see here. Let me check on the comments. Nice. I am having a nice Thanksgiving weekend and getting a lot of things done. Hung the Christmas lights. I like to hang them myself. I could hire somebody to do it, but something about working with my wife, and I'm her soldier. She's the general, and she decorates the house. She makes it look real festive, man. I just appreciate my wife because she makes every holiday really cool. And Christmas is her Super Bowl. She makes the house look awesome. So I just I do what I'm told, and I hung the Christmas lights, hung the new Christmas flag. She's got all her decorations around the house. So it's been a fun week. Everything's operational. Everything's working. Looks like we need to keep the Fed on track on the rate reduction. I think it's going to happen. I think chances are we're going to see a 25 basis point reduction in the month of December, and it may be a 50. If it's a 50, look out. Market's going to rally. It's going to rally hard. All right. Let's get the juices flowing. Let's look at a big cap just to take a look at a company that I earlier commented has been under some pressure, and that's Nvidia. Nvidia is the most valuable company traded on the stock market, $4.3 trillion. That is a lot of investors putting their capital into one company. Now, it's well-deserved because when you look at the fundamentals of Nvidia, it's a real valuable business. Its PE for 2026 is 25.5, which is quite reasonable. Once I show you the growth rates, 25, that looks pretty darn reasonable. Analysts think it's really reasonable, and they think it's discounted by 40%. Look at that. It has been working year to date, up 31.8% for 2025. And of course, over the last 5 years, this thing's just been a wealth creator. Nvidia, the wealth creator. They don't do semiconductors. They make investors wealthy. That's what that company does. This company has been growing really impressively. This is their last full year, which ended January 26, 2025. When we look at the quarterly, the growth continues. And what's cool about Stock Analysis, the website, is they put forward, they aggregate a lot of the analyst data, and 39 analysts are putting a price target on Nvidia. And there's some high price targets on Nvidia. Some analysts think it could double in stock price, and some believe it can drop down to $100 a share. I'm more of the camp that it's probably discounted by 10 to 15%, and I'll show you my valuation in a bit. When we look at a forecast, and these analysts participate, 68 of them put in their research and aggregating that research and saying what the consensus is that Nvidia, we're in the year that ends January 26, 2026, which is going to end in 2 months. And the year that follows, they're going to grow 37%. And then the year that follows that, 39. Then they're going to plateau a bit. But to have 2 years of growth at 37 and then 39, and the company getting to a $400 billion income or revenue level is really impressive. When I show you cash flow, it really shows how much value is coming out of NVIDIA. The earnings per share is going to grow even faster. They are just making a lot of money. And their PE ratio in 2 years is going to drop to 18. I don't think it should drop to 18. I think it should be at worst mid 20s. So I think this is somewhat of an opportunity forming before my eyes. One thing I want to show is margins on NVIDIA. A very valuable business is a business that has the ability to generate very high profits, very high free cash flows. NVIDIA most definitely does that. When we look at their gross margin, 70%, profit margin, 53%. That is incredible to have that high of profit margin and free cash flow margin of 41%. These are incredible numbers. Now, can they defend these numbers? They can, because NVIDIA has the patents. It's the only company that can produce the high performance compute that they provide that is in demand right now. So they can defend these margins, whereas other companies may not be able to within this ecosystem. So I think that NVIDIA, if it's seeing some pressure due to the stories that are surrounding NVIDIA, that, hey, maybe the market's going to start using less expensive compute coming from the likes of Google in partnership with Broadcom. Now, I think some capacity is going to go there, but the real premium performance that companies are looking for, they're still going to buy it from NVIDIA. So there's some stories that can really move the NVIDIA stock higher. For example, if they're allowed to sell into China, it's just going to create more revenue for them. So NVIDIA may be a nice little opportunity developing in front of our eyes. And the market does this. It gets hung up on a story, and then investors sell out because they just don't want to be caught up in a loser. And this stock here is discounted by 14% as I speak. Now, that's a discount that I'm willing to buy shares into NVIDIA. If it's under pressure tomorrow, I'll probably buy some more shares. I've got a tiny position in NVIDIA already. I'd be adding on dollar cost averaging. If the market continues to sell off NVIDIA, I'll continue to buy because I think it's a nice opportunity to buy into the great NVIDIA. So it's interesting to see that we are rotating to a certain extent. Some money is flowing from NVIDIA into other stocks. All right, so that is NVIDIA. Interesting how that's playing out. I've got my eye on NVIDIA this week. We'll see how it trades. And if it's discounted, if it sells off, I will be a buyer. All right, looks like somebody wanted to see RMD, which is Resmed. Resmed develops, manufactures, distributes medical devices and cloud-based software applications to diagnose, treat, and manage respiratory disorders in the US and internationally. So they're trying to help people with, I think, sleep apnea and those types of conditions, sleeping disorders, that kind of thing. And here's the sleep apnea comment. So those things are happening for Resmed. Looks like Bo is back. Man, regular viewer. Do I like NVIDIA or Uber more? Oh, man. Let me think about that, Bo. I'm going to think about it. I'm going to come back and give you a complete answer there. So Resmed. So Resmed's a med device company. And They're in the healthcare space. And med device, it's a good industry. It's just not as profitable as pure play pharma or biotech. And I'll show that to you. So I'm careful not to go too deep with medical device, and we'll see how this stock has performed. Year to date, it's up 12%, pays let's call it a 1% dividend. So this hasn't been a losing stock, but it hasn't kept up with the S&P. Over the 1 year, you're just breaking even. 5 year, underperformed, unacceptable. It's got to be at 100% to be a passing grade in my book. So you see how, med device, you got to buy it at the right time. I guess if you bought at the right time with these guys, and that was around the September timeframe, you're doing really well. But Resmed was not on my radar. We're now looking at it. We'll see how the future looks for this company. So this is a $37 billion cap company, market cap company. Revenues are $5.26 billion. Okay. So you're paying, call it 7 times revenue. Not too bad. The PE for 2026, 22.85. That isn't too expensive, assuming they're growing. If they're not growing, forget about it. So let's take a look at growth. So they have a year that ends June 30th. That's somewhat recent. That's about 5 months ago, I guess. Yeah, about 5 months ago. And they grew 9.84 for that year. That's good growth, almost 10%. If we look at the quarterly, 9%, 10%, 8%, 10%. That's good growth. Very good, consistent growth. And I would say that what Resmed is helping the general population with, it's a very common issue that people are having with sleeping disorders, sleep apnea, and so forth. So they probably have a very big addressable market. They can probably continue to grow and sell their machines, their devices to help people sleep better. Now, looking at gross profit, they're about a 60% gross profit company. Let's take a look at their margins. This is where they have a lower ceiling of overall valuation compared to a real successful pharma company or biotech company, because those companies have 85% gross margins. They have better profitability. With better profitability, you get to load up your balance sheet with cash. You get to increase your earnings per share through profit. But these guys aren't doing bad. 27% profit margin, excellent. 32% free cash flow margin, that looks good to me too. These two numbers look really good. Profit margin, free cash flow margin, very, very good. And the growth is very good. I'm impressed. I'm liking what I'm seeing in Resmed. So let's take a look at the balance sheet. I like looking at debt levels just to make sure I'm falling in love with a company. I don't want to fall in love with a company that has a bunch of debt, because it could be a company that has great ideas, a good product, but it has a terrible balance sheet. It ruins the whole thing. It really does, because a bad balance sheet could keep a company from really executing their business plan, because they'd be pretty much trying to pay off that debt and not be able to realize the full potential of that business. But not to worry. Resmed has more cash than they do debt. So no problem. We got more cash and debt. We are good to go. They produce $1.77 billion of free cash. That's per year, trailing 12 months. I would probably want to go with the profitability I saw, good balance sheet. I can go 20 to 30 times that number, back of the napkin. And we get to about 35 to about $52 billion of value. That's the range that we're going to land on this stock, probably closer to 50. And they are at 37 billion. So it looks like an interesting investment. We'll do a valuation on this one. Be a good one to create. I don't think I've done one, so this one will do kind of let's build it from scratch. Now, analysts, 11 of them are covering the stock. Now, we saw NVIDIA, there was like 68 of them covering the stock. So that was a good number of analysts. The higher the number of analysts, the more confidence I have in the average price target that we have. But 11 isn't bad. They're saying, hey, there's a discount available on Resmed. Okay, sounds good. And it is, the price targets are somewhat near each other, so we don't have a big dispersion, which could lower my confidence. All these analysts are saying, hey, there's this stock is worth at least 269, but it could also go up to 330. Well, all these price targets are above the current stock price. So that looks good. All right, what's going to happen in the future? According to 22 analysts, it looks like the current year is going to grow by 9.8%. That ends June 30th, 2026. The year that follows, they're going to grow by 7.3%, 7.3 and 7.6. Now, that's not like crazy growth, but it's good growth. They are showing me that they're very profitable. They're generating cash. That's good growth. They're also going to expand their profits faster than top line growth. So that looks very good. They're going to get their earnings per share, their PE ratio, down into the teens over the course of 3 years. That looks good. Very good. So I'm liking what I'm seeing. This could be, and the thing about med device and healthcare is it's lower risk, because whether we go into recession in a year or two or not, people are going to treat their conditions like sleep apnea and so forth. And a lot of these treatments are covered by like Medicare or health insurance. So it tends to be something that has a pretty solid dependability. So if we have recession, no problem. People are still going to buy this product. So let's take a look at a valuation of Resmed. I wonder if I have a valuation. I have, 800 or so valuations in this repository. So I'm not sure if I have Resmed in here, but let's take a look. Looks like I have it. No, I don't. That is a different company. It's similar, but different. So that's not in there. Now, the company that I do know I have in here is Intuitive Surgical. So I'm going to go to Intuitive Surgical because I like to pair up the companies that are similar to each other around the same kind of area of my repository. That way I could like compare them, right? So Intuitive Surgical, they're more in the hospital doing all these really advanced products, med devices. These guys are doing pacemakers. Boston Scientific, that might be a good one to put it under. So let's put it under that one. That way, when I'm done doing Resmed, we can kind of see what else is in the neighborhood or in the area of med device. All right, so we're going to take a look at Boston Scientific, copy it, and then we're going to use that as kind of like the starting point, the model that I'm going to use. This is a model I created. Again, if you want to copy this, become an advanced member and you get a copy. You get a copy of this. I have a shared folder. You can create your own valuations, really get into a stock that you feel is worth following. So try to get this completed for you guys. Now, why is that not updating there? All right, I'm not going to get hung up on that for now. I'll come back and what happened there? So I think here we go. So then my number lock was turned off. Sorry about that. That's my problem. All right. So I think I'm going to get back into the swing of things here. All right. So look at that. Problem solved. Okay. The number lock is working again. All right. So I'm going to put my stock symbol here. It's going to update a few fields there. And this is Resmed. All right. I'm going to go with a discount rate of 7.5. We saw that the the balance sheet's in really good condition. And since the balance sheet's in really good condition, and they are in what I believe is a lower risk industry, which is med device, it's going to be in demand no matter what. I'm going to go with a lower discount rate of 7.5. It's the same discount rate I would use with like Meta and other good balance sheet companies. All right, let's start cracking this puppy open and seeing what it's worth. I'm opening stock analysis on a screen you guys can't see. That way I can multitask and fill this in front of you. All right, so first order of business, let's look for the trailing 12 months free cash flow. And for Resmed, that number is $1,770,000,000. Pop that in there. Now that's taking the growth rate, and that's 17. That's a little too high. I would say that they're supposed to grow 7% in the future. So we're going to go with 8 there and then 4 there. So the intrinsic value is going to be 57. Now they had more cash than debt, which was good. And the cash on the balance sheet, $1,380,000,000, and the debt was $846 million. Shares outstanding. I'm going to update that with a lookup and get that formula. Then we'll go back to Resmed. And we'll do a Google lookup. These Google lookups are cool, so I like using them where possible. They look up the share count and kind of do that updating, and then the model on Resmed will stay current. So you see on cash, on free cash flow, Resmed's discounted. Look at that. Looks good. Earnings per share. So what is the consensus earnings per share for the next full year? And that number is $12.10. And since they are growing, good profits, I'm going to keep to a 24 PE ratio. Looking at future years, it's supposed to grow by 9% and then 8%. So I'm going to be a little conservative and go 7. So Resmed provides a 30% discount when I blend the value of the company using free cash flows as well as earnings per share. That's a nice discount on a company that's pretty solid. Now, looking at, let's see what the stock's been doing lately. The stock did have a pretty substantial pullback here where the stock sold off, probably on some concerns, maybe some stories around, hey, is the government going to fund these things and so forth? And then it rallied from there. I mean, geez, investors really did well if you bought back then. And we've had a nice pullback here recently from August up until November 20th. Now, there is some stories coming out of Washington that they're going to fund a subsidy to help people that maybe don't have enough money to buy healthcare. They'll subsidize them getting on paid healthcare. So that's positive for health insurance companies as well as companies like Resmed, because there's going to be a bigger population of insured people. And that's what's causing, I think, this rally that we've seen over the last 5 days. Overall, I think this is a good stock. It's a buy in my book. Am I going to buy it? I don't know. I'm going to think about it. I've got a good list of healthcare stocks. I don't have a med device stock, but boy, if this thing maybe got priced down to like 230, I probably wouldn't resist and probably start buying shares. But it looks like a good company. It's providing a discount. The pricing's good. The future looks good. Pretty good stock to look at. And what was the dividend rate on Resmed? 1%. So it's not a dividend payer. That's another thing about pharmaceuticals. They pay really nice dividends. Like right now, Pfizer pays, I think, 6 or 7%. That's a really nice dividend. So this one here at 1%, not a big dividend. So that is Resmed. It looks good. I'm going to put it on my watch list and just make sure I keep an eye on this. And let me find Intuitive Surgical again and put it right underneath that one. That way I can keep an eye on it and see, maybe I buy it in the future. Maybe. I did some homework. I like what I'm seeing. I don't want to jump into it right away. I want to kind of sleep on it, maybe get with my colleague, Daryl, who does technical analysis, see what he thinks of Resmed. And he might either see something that concerns him or something that he thinks, hey, you know what? Looks good. If that's the case, that'd be one more reason to buy into Resmed. But I'm going to take my time. I'm going to go watch with a possible buy on Resmed. And we'll leave it at that for now. Good question on Resmed. We're out of the gate looking at a good, solid stock that might be a buy stock in my portfolio at some point. Thanks for asking about that one. I think you also asked about Garmin. Let's go back to stock analysis, the website. Let me clean up my act just real quick. And Garmin is the next stock. And Garmin, I know they did navigation and stuff. And if you have like a ship or a boat, they sell like industrial like equipment to help you navigate. So, hey, Mark, it's almost midnight where you're at. Thanks for joining. Wow, we got somebody from South America. Cool. Thanks for joining, everyone. All right. So Garmin designs, develops, manufactures, markets, distributes a range of wireless devices worldwide. The company offers running, multi-sport watches, cycling products, smartwatch devices, Garmin Connect, mobile, and so forth. So a lot of wearables business. I know before smartphones, these guys used to sell consumer product that would give you turn-by-turn navigation. They're classified in the technology sector, instruments. Okay. Got it. Here's a picture of their product for a cyclist. Other devices like wearables. So if you're a runner, maybe that's something that you would wear. And I think maybe some mountaineers might also like it from an altimeter perspective and that kind of thing. So this stock over the 5 years, it's done okay, 66.8, not bad, and pays a dividend as well. So you're up there around 70 to 73% overall performance. It's not bad. It's not bad. It's not great, but it's not bad. And this is a $37.5 billion market cap stock with about $7 billion of revenue. The PE ratio for 2026, 23. Analysts think there is a discount available. When we look at their growth, their last full year, they grew by 20%. That looks impressive. They've had some green years too in the past. Looks good. The quarterly growth looks good. So these are good growing companies. I think who asked about these? I think it was the Elder. So you're picking out healthy companies that are growing. Good job. That's what, preferably, we want a business that just is on an upward swing. They're doing well financially. They're doing well operationally. Customers like the product. They're buying more of the product. That's the kind of company I prefer to buy, as opposed to some of these sick puppy stocks where, well, if they get healthy again, they may live to be a really good company. Well, a couple of those ain't bad or not a bad idea, but having a majority of stocks in the portfolio that are good, healthy businesses is a good idea. And top line revenue growth is the first metric showing it's a healthy business. So the quarterly looks good with good growth. And we're going into probably one of their more important quarters, the holiday quarter. And it looks like last year they sold 23, or they grew by 23%. That looks good. So gross profit looks good. I think it's going to be around 60%, 59. Profit margin looks good. So these numbers look good, similar to Resmed. Looks good. All right. So wearables, of course, are pretty popular with people. I don't have a lot of wearables. I don't like watches and stuff. I have my phone, and that's about it. But a lot of people love these things. All right. So I like the growth. Gross profit is good. Not great, but good. Net profit is good. And free cash flow looks good. Looking at their balance sheet, do we have a debt problem? Let's make sure we can check that off. And they have way more cash than debt. No debt problem here. Okay, that's what I want to. That's what I want to see. They have in excess of $2.3 billion of cash. Very good. 4 analysts cover it. And the good news is they all think it's either worth its current stock price or more, but it's only 4 analysts putting in their research. For 2026, 11 analysts are putting their research into this consensus forecast, and it's expected they're going to grow by almost 7%, followed by 7, followed by 8. Those are good growth numbers. They are becoming a substantial business. $7.76 billion in overall revenue for 2026. Their profits are going to expand. That looks good. And it's going to bring down their PE ratio down to 19 eventually in 2028. So these numbers look good. So I think that this is going to be, and let's look at their free cash flow. $1.33 billion in free cash flow. Not quite as high as Resmed, but it is positive, which is good. And if I went 30 times plus their excess cash, I'm going to get up to 40 billion plus that, call it 3 billion of excess cash. So this company is worth about 43 billion, rough cut, and they're being priced at $37 billion market cap. So this is a good opportunity. It's not a fabulous, awesome opportunity. It has had a pullback recently from 251 to 195. And this pullback, this is the sell-off that we saw, and it's taken a lot of stocks down. So this currently Garmin is discounted and might be a consideration for investors to take a look at it. And if it's got a good spot in your portfolio, maybe it's a good buy. I'm not quite a big buyer into these types of companies, consumer based kind of electronics and so forth. But this one looks pretty good. And it's a good time to consider it because we've had a sell-off recently. And it's proven to have periods where the market just loves it. We're going into the holiday season, and they're probably going to have, a pretty good quarter getting through the holiday. Overall, if you look at from 2022, where a lot of businesses were sold off, up until now, really nice upward trajectory on their stock price. This is a pretty good idea. It's a good time to consider it. It's sold off, has good fundamentals, good growth. They announced their earnings on the 29th. Now, they started to sell off before their earnings. And this earnings season that just passed here, it was one where even if a company had really good earnings, stocks still sold off because investors were in the mode to sell. So I'm not going to hold Garmin kind of like completely accountable for the stock drop because there was a lot of stocks that were dropping, from Meta to others like Nvidia I covered earlier. Just a lot of stock sell-offs. I think the market was in the mode to sell. So good luck with Garmin. That's as far as I'm going to go with Garmin. And I appreciate you asking. Good to see you, the elder. All right, Bo, back to your question. Do I like Nvidia or Uber more? All right. So Uber has a fantastic discount, but let's take a look at Uber for the past year. This stock has worked, but it hasn't really been all that exciting. It's been a good steady stock. I like Uber. I like the strategy. Man, I bought shares. I'm doing great with the stock. So no complaints here. I own a big position of Uber. It isn't going anywhere. I'm going to hold that stock and continue to see them continue to grow. So I like Uber. But let's turn our attention to Nvidia. Overall, Uber is better discounted than Nvidia. Now, Nvidia has certainly done fantastic, but we're seeing this pullback, and we haven't seen Nvidia get its proper stock increase based on the awesome earnings they've been having. So I think there is a little bit of disbelief in the market. And what I would say is Uber is the better pick between the two. Here's why. I think Uber is going to be worth 2 to 3 times more than its current stock price in the next 2 years. And I say that because the pricing on Uber stock, when you value it on free cash flow and earnings per share, it's just a really compelling discount on this stock. Where Nvidia, you're getting like a 14% discount. Well, that's maybe good for a nice 20%, appreciation, in a stock, but that's it. Where Uber continues to get bigger, more valuable, and I think it's had a consolidation over the last 4 to 6 months, and I think it could start to move higher and then go up in stock price from $87 a share up to 150, up to 200. So Uber would be my pick between Nvidia and Uber. If I've only had enough money to buy one of those stocks, it would be Uber. And I continue to hold a big position in Uber. I continue to add to that position on sell-offs of Uber. All right, next question. Do I like Oxy or Devon? Okay, so let's take a look at both. And I'll get refamiliar with Devon because I know Devon high level. I know Oxy really well. And Oxy is discounted if I compare its historic free cash flow rate versus where the stock is trading. So it's, in my opinion, a very good long-term hold. Now, Devon Energy, nice discount. Let's take a look at a couple of things. So first, I want to get refamiliar with where within the energy industry does Devon play. So these guys they explore, develop, produce oils. So a lot like Oxy. Now they do list out natural gas liquids, which is good. That is a very important commodity right now because we need more energy production. And the quickest way to generate power is to buy these turbines and have this natural gas be the fuel for these turbines. So it's a really good idea. So they're very similar. Now let's take a look at where the stocks have traded. I'll go ahead and compare them together. So Oxy is, let's see here, for the year to date, Devon has outperformed Oxy. And I think it's the natural gas component of Devon. It's just enabled it to hold its stock price better because the natural gas is in high demand, especially if you have it in the right place. When we go 1 year, Devon wins that selection. When we go 5 year, they're pretty much together. So if I'm going to pick, I'm going to pick Oxy because Oxy has a lot of famous investors behind it. They have a very good discount available. And if I'm going to chase natural gas, I would go over EQT. That's the stock that I'm buying into. It's a close one, but I would pick Oxy over Devon. Better discount. If oil prices move up, Occidental is really going to perform. But they're pretty similar. So that's my research on Oxy versus Devon. Thanks for asking, Bo. Good to see you. Anyone have thoughts on Meta overnight? I can't listen ATM, sorry. All right. And again, good to see you, Mark. Almost midnight, man. Staying up late. And you are in South America. Cool. And I don't understand the comment from Giselle. All right, so we got through those requests. If you have a request out there, would like me to look at a stock, if you're a member, just pop it in the chat. If you're not a member, no big deal. You can buy a $5 super chat and I can review that stock for you. Or you can become a member. It's easy to do so. You can do it on the fly. Your name will appear differently on the stream. I put the message. I'll put a message out there on the chat where you can easily get to where you would become a member if you're interested in that. Pop it in the chat here and get back to looking at a few stocks as well as the market. All right, it's coming up on 7 p.m. Eastern. I don't think we're going to get any type of futures market number. You know, it's pretty flat. It's too early to tell. What's going on with the crypto space? So Bitcoin is at $90,654 per coin. That has really seen kind of a lot of pushback. It had a high, Bitcoin did, of $124, and it really tanked, sending down shares of like MicroStrategy and others. So it's back to 90. It really recovered over the last couple of trading days, but we'll see where it goes. With lower interest rates, there's going to be more risk taking. I think Bitcoin's going to be fine in 2026. I do own Bitcoin as an investment. It's a hedge. It's an investment I made and I've done well with it, but I can't like say that I would buy a lot more. I think I bought when it was kind of a risky investment to make in 2017, 2018. It's risen really nicely. Good to go. But I'm not a big crypto investor. Most of my net worth is in stocks and real estate. So that's what's going on there. All right. So let's take a look at the chat here. Herdo, good to see you. Let's take a look at Pfizer. That's a real good idea. Let's look at Pfizer. It's paying a nice dividend. It's been going up recently. Then Mark, you'd like to look at Iren. And I think it's NBIS and CIFR. All right. Okay, so let's take a look at those. All right, so good to see you, Herdo. Let's take a look at Pfizer. And Pfizer, over the last couple of days, it's up a little bit. Over the last month, up about 4%. Year to date, you're not even. 1 year, barely even. But look at this dividend. And this company is cranking out profits and it's cranking out cash. So it isn't growing, but man, they are cranking out profits out of their pharmaceuticals they sell. To kind of show that, I'm going to go to the trailing 12 months. They are growing a little bit. We're going to look at their forecast next. And when we look at their margin, if you recall earlier in the stream, we looked at Resmed. And they had gross margins of like 59%. You see here, Pfizer's at 74.8, higher gross margins. Their profit margins are 15.6%, free cash flow margin 16.5. And this has been a good free cash flow company. They're up to $10.3 billion of free cash flowing into that balance sheet, just making that balance sheet more and more valuable, attractive. Use whatever adjective you would like to talk about cash. So that looks good. Let's look at the forecast. We got 9 analysts covering it. They think 11% discount. Pfizer is a stock for a lower risk investor, an older investor that's like, hey, I like to make 10 to 15% rate of appreciation and dividend per year. Is there a stock that would be in that category? Yeah, Pfizer. It's going to be lower risk because a lot of their pharmaceuticals are pretty much used by doctors, hospitals. It's a standard remedy for a lot of people with issues that drug handles. Now, when we look at their forecast, this is where it becomes a little bit of a concern that they're not growing. Is that going to be a problem? Now, for 2026, it looks like they're going to grow their profits. But then after that, they've got to start growing somehow. So they're going to do well. The PE is really low for a reason. There's no growth available from the company. So that's what really has kept the stock price down. I still think it's investable. I'm buying into the shares because I like that dividend. And I think there's upside in Pfizer. There's an upside surprise that I could expect, especially as we see the government fund more of the healthcare programs, allowing people to have health insurance. I think there could be higher volumes and some growth available for Pfizer. So Pfizer, the dividend's good. It's not going to be, a stock where I could say, oh, that stock's going to triple in price over the next 5 years or so. No, it'd be a stock that it might be up 50% over the next 5 years, and you collected a nice dividend along the way. That's the kind of investment that Pfizer offers the investor. I have a valuation on Pfizer, and my valuation shows that they're really discounted because they're just cranking out cash. They're cranking out profits. They already discovered these drugs that they're selling. So they don't have to put much into that, pipeline to create drugs. They are acquiring some businesses, which is good. Some of those businesses got to start growing to help Pfizer grow overall. So that's my review of Pfizer, Herdo. Hopefully you found it interesting. And I hope Pfizer starts to do better. They were doing well coming out of, COVID because they had one of the vaccines. But after that, it's just not been a pretty picture for Pfizer. They still are a pretty sizable company, 146 billion in market cap, 63 billion in revenue. PE for 2026 is 8.6. That is so low. Incredible. So I think it's a good place to park some money, especially some money that I want to put in maybe a lower risk category. Almost like, hey, would I rather buy a bond or buy Pfizer? I'd rather buy Pfizer because I'm going to be paid better than a bond. And I have some upside potential, especially with a stock that's been beaten down. So that's how I invest in Pfizer. I put it in the portion of my category, my portfolio, where I want to park some money in lower risk stocks that, I've got plenty of the high risk ones like Oscar and Stera Labs and Robinhood and those things, man, they're exciting to watch, but they're risky. So it's good to have some stocks that are lower risk. Herdo, you are awesome, man. You are very generous, sir. Thank you so much. I really appreciate it. Appreciate you being a member and coming to the streams. Really appreciate it. And I appreciate the super chats. Thank you, sir. All right. So that is Pfizer. And we will move on to, I think you wanted to look at Iren, Mark. Iren, I believe, is a data center company, a hyperscaler. Yeah, it's a data center company, and they're in Australia and Canada. They operate computing hardware and electrical infrastructure in data centers. It also mines Bitcoin. So a lot of these Bitcoin miners see that, hey, there's a lot of money to be made in providing high performance compute for the companies that want to build out AI. And they're either diversifying, kind of like, hey, we're going to do both. We're going to mine for Bitcoin and we're going to do data center services. Or in the case of CoreWeave, they kind of said, hey, there's more money to be made in AI infrastructure. So they moved over to AI infrastructure because they did start as a crypto miner way back when. So these guys are trying to do both. And taking a look at their website, it looks like they're saying they have data centers and they have the power for those data centers. Okay. That makes sense. All right. Let's take a look at their fundamentals now. I understand their business over the 1 year. Wow, they really have gone up in price. And these guys are just kind of existing, and all of a sudden, boom, their price really skyrocketed. Now, is that going to be sustainable? Are these guys going to make a lot of money, or are they going to fade and really torture investors as the stock price comes back down to $5 a share? That is the magic question. I can show you analysis, I can show you my research, but then you'll have to make that decision. Where do you think Iren's going to go? Let's take a look. So $13.55 billion market cap, not quite as valuable as a CoreWeave. And the other companies these guys are competing against, whether they want to admit it or not, are these big, gigantic companies like Amazon, AWS, Microsoft Azure, and Google Cloud, because those guys most definitely are providing high performance compute. These guys, Iren, they're probably just less expensive, more flexible, and some companies may really want that. Like, hey, if I work with, for example, AWS, it takes a long time to do anything, and they're a big, big company, so I get treated like a small fish in a big ocean. If I go to Iren, I'm a big fish in a small pond. That might be the case. These guys this year, PE ratio is 24, but forward PE, not available. So now they're growing fast, right? This is the annual. Let's go quarterly. Growing real fast. So they're adding customers into their data center very quickly. Looking at the trailing 12 months, see if they're making money on that revenue. So pre-tax income looks good. They made money. Made a lot of money. Okay. Free cash flow, negative. They're putting more money into their data centers. The equipment they're using is really expensive. NVIDIA GPUs, all the infrastructure that goes in there. So they have to temporarily just go negative cash flows just to grow the business. And at some point, they're expecting we're not going to need to feed the data centers all this capital. We'll be able to get some positive cash flow. So they do have good gross margins. This is a unusual profit margin that's higher than their gross margins. I think there was probably some asset sales or something that enabled them to have higher profits in that period. We'll take a look. And the free cash flow is negative. So the negative cash flow is not going to allow me to value Iren on free cash flow as a forecast. But analysts are pretty positive on this company. They believe it could rise. On average, 9 of them are putting price targets out there. They think it's discounted by 51%. One analyst is concerned with the stock. Okay. And looking at a forecast, 13 analysts are contributing to the forecast. The year that's going to end June 30th is the year we're in. And the PE ratio is 66.66. Okay. Moving down to 45. Okay. Now, they may hit this forecast or they may be disrupted by these bigger hyperscalers. That's what worries me. And look at this number here, negative growth. Why would it be negative? There's 3 analysts putting that forecast out there. Is it that we're going to have an AI build out and then that demand's going to go away? Companies would be done building out their large language models. Well, where are they going to get revenue? So as we get closer to that period where you're seeing a decline in sales, you're going to see investors abandoning ship, right? We're in this year. We're operating in this year. We're already seeing tension in the data center. Like, all right, high stock prices are not going to be tolerated unless these companies can show really good fundamentals. That's the environment that I think we were operating in November. I think that's going to put some tension on this stock. So would I invest in this stock? No. Why? There's just too much that could go wrong. And then this stock's just going to unravel and sell off. If everything goes right, I think you can make money. But the stock's already bid up. And even back here, I was afraid of these. Instead, I invested in Google Cloud, Amazon AWS. So I'm good with data center. I got plenty of data center. Okay. Got big positions there. So I could rather, instead of playing the short game where, hey, I'm going to make a lot of money very quickly and then sell. Instead, I want to make a lot of money on Google over the next 5 years. I want to make a lot of money on Amazon over the next 5 years. And since they have such big data center operations, they're going to make plenty of money in that area. So that's how I played the data center. Iren, I think, is high risk, high reward. But again, the stock price is already bid up. Now let's take a look at their financials straight out of their website. So where's your investor hub? Here we go. So what I want to see is I want to look at their financials because, you know, that high profitability that we saw, that is unusual. I want to go line by line. If you want to get to know a business, of course, you read their website, you get to know them. But then you look at the numbers. The numbers is like opening the hood of a car. All right, then you look, if you open it up and the engine bay is like nice and clean, you can tell this car has been well maintained. Maybe you're looking for a used car. This car's got 80,000 miles on it. But you open the engine bay, everything's nice and clean. It's where it should be. You see some new parts that have been replaced, so the maintenance has been good. When you look at the financial statements, that's what you're doing. You're opening the hood on the business. Is this business in good condition? So we're going to look at the 3 statements that every company must produce are the income statement, the balance sheet, statement of cash flows. The balance sheet is basically how much money do you have in the bank, how many liabilities do you have, how many debts do you have, and all that good stuff. So let's start with the balance sheet. So they have $1 billion of cash, and this is what we're keeping an eye on. This is what is being reported for the most current quarter. So they've got some good cash on the balance sheet. They own some assets. This is the equipment in the data center. Okay. And now we're looking at liabilities. So this is debt. Okay. So this debt is about the same amount as the cash. So they don't have a debt problem. And their equipment, it's a little bit of a surprise that it's not higher. I would have thought it'd be higher. That's what I was thinking, because they're a data center company. So now we're going to move into the income statement. So the balance sheet tells me it's almost like it's a gauge of how disciplined you've been for the last 5 years or so, how much cash you've accumulated. Did you not get too many debts on your balance sheet? Have you maintained your financial posture nice and strong? That's a balance sheet. Now, the income statement is how good are you performing now? It's almost like saying, if you look at a football team, US football, sorry, and you look at the Kansas City Chiefs, and you're like, hey, over the last 5 years, it's been a great franchise. The balance sheet would be like last 5 years. But this year, they have a losing record. That's the income statement. This year, the Kansas City Chiefs, their income statement, their performance is not as good as the past. Okay. We can't say, oh, well, the Kansas City Chiefs have been good for the last 5 years. So maybe now they're beginning to have some aged players and not going to be as good. Income statement tells us how good is Iren performing this year. So when we look at their revenue, it tells us a lot. Bitcoin mining, AI cloud services. So these guys have been bid up because of the AI cloud business. But look at this. Only $7 million of their revenue is from the AI cloud side. Everything else from Bitcoin mining. Well, that's a big problem, because the market, I think, believes that a majority of the revenues are coming from AI cloud services. It's not. This is a tiny number. So we got a problem, Houston. And I think that analogy is lost on somebody in the UK. We got a problem. Okay. This is not the company I thought I was looking at. This is a very low cloud business. Cost of revenue. Okay. Not too bad. Selling and administrative, it is a little high, especially considering this is your number for AI cloud. Geez, terrible. So they are operating at a loss. These are their operating expenses. So they are operating at a loss. Okay. Now remember, I thought that they would have, here it is. So they sold Bitcoin, and it looks like they sold it at the right time. And they were able to achieve a gain on that Bitcoin. But they're not going to be able to do that every year. It's just this year, this period, they happen to have done it at the right time. They sold Bitcoin at a good price, and voila. But this is not repeatable. That's why it's separated in other. So this is performance in the current year. So I am really concerned, folks. This is a sell. I am not buying a business that on the surface, hey, we're going to do AI cloud services. And then I look at the details and I'm like, you're not doing much of any AI cloud services. You're mostly a Bitcoin miner. I'm not interested in buying a Bitcoin miner. It's not an investment I want to make. So that's why I invest in Amazon, Google. It's like, I know what I'm buying there. Here, it's a big surprise. So this one here, Mark, I just ran into a big, giant showstopper. I am not investing in a company that's just doing $7 million of AI cloud services. Free cash flow, they are generating free cash flow. This is where the cash is going. It's going in the data center. Okay. They're building it up. If we have a slowdown in companies spending into the data center, these guys are going to get crushed. And I think this stock, if if companies, and let's look at the description here. Let's look at their website. So here it is, AI cloud, AI data centers. That's how they're representing themselves, right? They're not talking about Bitcoin mining. But when you look at the financial statements, a majority of their revenues are Bitcoin mining. So the marketing doesn't match reality. I'm out. Sell, sell, sell on Iren for me. So that's why we do our homework. That's why we look at financials, is we want to look under the hood for a car. Or I think in England, they would say, lift up the bonnet and look at the engine. And I lifted up the engine on Iren, and I thought it was going to be a 8-cylinder, 380 horsepower engine. I opened it up. It's a 4-cylinder. And I'm seeing oil leaks everywhere. I'm like, uh-oh, got a problem. I am not interested in Iren. I'm glad we dug deep on that one. NBIS. So these data center companies, I'm concerned with because they're getting into a business that is expensive to run. And these guys are in the Netherlands, if I recall. Now, somebody in our community that's a member, he's made a lot of money on this. I'm happy for him. That's great. And I am streaming tomorrow, Mark. Streaming tomorrow, 9 a.m. Eastern in the morning with Daryl. So I know it's past midnight where you're at. So if you want to go to bed and tune in tomorrow, great. Back to Nebius. Nebius is an AI company. Now let's take a look at who they are. 23.89 billion in market cap. They did sign a deal. Was it with OpenAI or somebody that said, hey, we would like to use Nebius as a data center for some of our workloads. And hopefully I find it and I don't drive you crazy scrolling down, but let me try to get to it. So I'll probably find it on their investor page in news. But one of the AI companies signed a deal with Nebius, and it sent the stock flying high. Now, this stock is up 342. We're dealing with the same type of business, data center. This is risky. It's customers can come and go. It's not like you have a patent on, we're the only ones allowed to run data centers. No, this is a service like a plumber or an electrician. Yeah, you need them. But if a plumber said, yeah, you want me to come by your house and unclog your kitchen sink, I'm going to charge you $1,000. I'd be like, no, thanks. I'll go to the guy who charges me $80 to router any line. He comes out, does a nice job, and we're good to go. So there's competition out there. Even though plumbers are very well appreciated and paid, they can't just charge any price they want. Nebius isn't going to be able to do that, especially with very sizable, reputable companies like Amazon, Microsoft, and Google that are playing in the big leagues of data centers. Those are the big leagues. These guys are trying to pick off a customer or two that will bring their workloads over to their company. P ratio for this year is 192, but going forward, there's none available. These guys are growing, but we're going to look at their financials and try to see, is it all cloud infrastructure? Because I think Nebius did do crypto mining as well in the past. And you see that, I think it was this company. No, it must have been a different one. No, it was this one. They kind of switched businesses. They were running up. They were a Bitcoin miner. They got up to 4.7 billion. And then boom, we're going to switch businesses. And they pretty much kind of went down to close to zero. Now they're building that business back up. So it's easy to see how they pivoted. So these guys are growing fast. They're expecting to continue to grow fast. Let's see if they're going to make money. So Nebius data center business, but we'll see how much of it is data center versus Bitcoin mining. All right, so okay, so we've got, here's their investor hub. I want to get to their financials. All right, so here's the earnings release. That might do the trick, but let me see if I can get to the actual 10K. All right, so let's see here. Nope. So all right, let's go with the earnings release, and we'll see how much they provide there. Okay. So revenues grew substantially, but I showed you how they were 4+ billion. They sold off, and then they rebuilt their business. Maybe they completely switched and they're like, we're just going to be cloud infrastructure. We'll see. And so the growth is pretty incredible, right? They're going from a very small number to a sizable number. All right. So the cost of revenues is not bad. Okay. And okay. So it'd be nice if they would have just put it in one schedule, but they didn't. So here's their cash versus plant, property, and equipment. So this means purchases of plant, property, equipment is we're buying GPUs from Nvidia, we're buying servers, we're buying racks, we're buying plumbing, electrical, all kinds of stuff. And they bought almost $1 billion worth of stuff in the last 3 months. They also generated negative cash flow from operations. So collectively, they're burning more than $1 billion in a quarter. Collectively, over the last 9 months, they burned $2.4 billion of cash from the negative cash flow from operations and the investment into their data centers. So this is why it's risky. It's like, whoa, that's a lot of cash that's going to the business. All right, so I wonder if they're going to give us some real financials. Here we go. Here we go. Now we're talking. So their cash is 4.8 billion. Okay, that looks good. Debt. Do we have any debt? So here's the debt. So they did borrow some money. So they borrowed 4 billion. You see it down here. And they didn't have it before. So a good part of this is the loan they got through the issuance of bonds. So they have more cash than debt, but they plan to put that money into that data center. Okay. And let's look at property and equipment. You see how it went from 846 million up to 3.3 billion. So that money's going to that data center. So they're going to keep putting money there. And again, if you see a slowdown in AI spend, and these guys are sitting on really expensive gear, that's where the times are going to get tough on this business real quick. So here is, so revenues, 302 million. It costs money to run this operation. A lot of it is depreciation on that expensive equipment. And they lost $361 million. Some of it is a paper loss because this is depreciation, but some of it is real, like sales and administrative. They have to pay people. Product development, they have to pay engineers, really qualified people. The cost of revenues might be electricity and those kinds of things. So if we look at the true cost, they're losing money, okay? Not including depreciation. And that's why their cash flow is negative. All right, so they had a gain. So they sold their Bitcoin or something and they took a gain. But this isn't going to happen over and over again, okay? They can't magically make Bitcoin appear and then they sell it at a profit again. So this is going to be like a one-timer. That's why it's put separately. It's not in the operations. Those are generally accepted accounting principles, and that's why they do it. Cash flow. So they did have income. This is straight out of the income statement. Depreciation gets added back, but you lose that gain, that paper gain on that Bitcoin, you lose it because it's not a cash flow. It's a paper gain. And it's negative cash flow. This is a negative cash flow business that is risky, that doesn't have a competitive barrier against competition. They're enjoying a very special time in the, in the evolution of AI where the market's really bidding them up. But I'm afraid of businesses like this. For this investor, way too much risk, not enough bang over the long haul. I'm an investor that looked at Super Micro 3 years ago and thought these guys are way too expensive because they don't have a way of keeping competition out. These guys flourished and then they crashed. Okay. I think this is going to be similar to what we see with Nebius, Iren, CoreWeave. You're going to see this really excitement and then reality is going to set in and investors are going to lose a lot, is my opinion on Nebius, Iren, and I think CIFR might be in the same industry. CIFR, Cipher Mining. Okay. So these guys are similar. They probably were doing Bitcoin and now are switching to try to take advantage of the AI cloud demand. They're up a lot this year, but the problem, the same holds true. Is the AI spend going to continue on? It could. These businesses, man, they're just, if it slows down, it's going to be really, really ugly. And they keep rallying higher. Look at this. These guys over the last month, they sold off from 24 down to 14. Oh, man. Then they rallied back. So we'll see how this ends. But just the competitive barrier isn't there from these businesses. They're competing against some of the world's most valuable businesses, Amazon, Google, Microsoft. Man, you can't pick any more powerful, stronger competitors. As AWS sells through a market and grabs market share, how are you going to compete? Maybe you compete on the edges and grab, workloads here and there, but are you really going to be able to sustain growth? I don't know. Especially if some of these smaller outfits, they're probably more susceptible to an outage or susceptible to problems because they don't have the staff that AWS has or Microsoft or Google. So good one to take a look at. We'll see how things play out, but those are my comments and my research on these cloud infrastructure plays. The elder Howard Marks started a position with Core's Oaktree portfolio. Interesting. So what is Core's? Core Scientific. Okay. And Core Scientific does technology, software infrastructure. Okay. Digital asset mining, and then they're going to get into high performance computing. So AI cloud infrastructure. So same comments I just said. Digital currency mining. I mean, that's been around for, I guess, 2009 to now. So that's 16 years. And it's competitive. And the halving that happens every so often in Bitcoin makes it more expensive and lower revenue to come from Bitcoin mining. So my comments that I just provided on Iren, NBIS applied to Core Scientific. It's risky. And Howard Marks, I don't have a lot to say about Howard Marks. I know that he is kind of an old school, respected investor. But I can't say that he's known for like, oh man, he called this or he called that. And he's not like very high ranked. I'll show you where I rank these famous investors based on their performance. So some of the holdings he has, here's Coors. So he did buy quite a bit, 114 million. But he owns Torm. I'm not sure what those guys do. Expand Energy, Garrett Motion, Anglo Gold, Barrick Mining. That's been good. CMAX, this is a cement company down. So there's like a lot of industrial. So he's not like a well-accomplished technology investor. Okay. And when I look at, I mean, Howard Marks is not ranked very high in my rankings. So it's not an investor that I follow all that close. I follow others. Tepper is number one. He's big into technology right now. Coleman, number two. He's big into technology. Those guys are killing it. And they're not investing in a lot of these cloud infrastructure plays, these AI infrastructure plays. All right. So, Mark. QXO. So QXO distributes roofing, waterproofing, and other building products in the U.S. Asphalt, metal roofing, wood roofing, tile, and so forth. So building materials. Industrial distribution. Okay. Lower interest rates will help this particular industry because with lower interest rates, people will be like, hey, I'll refinance my house. I'll re-roof my house. I'll recondition it, remodel it, that kind of thing. So these guys, 11% rise over the 1 year, year to date, 17.8. They don't pay a dividend over the 5 year. Weird. They had a really nice rally for a while, maybe a short squeeze of some sort, and then they sold off. Okay. So 12.6 billion market cap, revenue 466. They have a profit this year. Sorry, they're going to have a profit in 2026, forward PE. So they have slow growth for the last full year. Looks like they acquired a business. So they probably finished an acquisition because they were small and now they're gotten a lot bigger. So there's probably an acquisition out there and it's made them way bigger. And why isn't this? So did they take on a bunch of debt or how did that merger happen? So they do have some debt. Is it a big problem? Yeah. Debt to EBITDA 9. This is way too much debt. I want this to be below 3 and they're at 9. So this is a high risk stock. Way too much debt. No, thank you. QXO, good luck. All right, so that was QXO. Good to see you, Neil. Happy Thanksgiving. All right, good stuff, guys. So So did I miss Uber? Yeah, I covered it earlier. You can watch the recording if you like. And I did talk about Uber versus Nvidia, and Uber came out on top. Yeah, good to see you, the elder. Very good to see you. All right, good stuff, guys. So let's see if we've got any inklings of what's going on, anything exciting to report. Nope, not yet. All right. So that is what's going on there. See if there's any stories out there. So we had a good week starting December tomorrow. Okay, that looks good. All right, guys, this is a good time to take like a 5-minute break, and I'm gonna come back and kind of pick up where I'm at. Um, if you want to hang tight, think about some stocks you want me to look at, put them in the chat, and we'll go from there. And I'll come back in 5-10 minutes. In the meantime, I'll just leave you with the different ways you become a member. There's links on the chat if you're interested in that. Bear with me. Been streaming for about an hour and a half, and I'm going to go get some more water, and I'll be back in 5-10 minutes. Thanks. All right, guys, I am back. Thanks for your patience. And let's get back into looking at stocks. One thing I wanted to take a look at is how are the markets opening in Japan? Looks like they're down a little bit. Looks like Shanghai hasn't opened yet. This is probably from Friday. And looks like Hong Kong is about to open. So I seldom see any kind of correlation, Asia to the US, but it's interesting to see. I own a few stocks in Asia, so I like to take a peek in the evenings to see where the market is trading. Might tell me where my stocks are going to end up. All right, so it looks like some comments have made it on. Let's see here. All right, see here. So Monday, and so you're looking to get into Monday. That's a small cap software stock. And then AVPT. Take a look at that. I am still in Astera Labs. I own Astera Labs. I'm holding Astera Labs. Right now, Astera Labs is too expensive. It's priced above its value, and it has been trading higher with the rally around Broadcom. It's a tough one to get into because it was nice and low like 8 months ago, and then all of a sudden, bam! It just shot out of a cannon, and it's really expensive now. So I would think that it's a very volatile stock. It could be down 25% in the next month. So I'm waiting for the stock to come down before I buy more shares. Futures red. How you doing, Paul? And BTC down 3%. Interesting. Okay. So you're seeing crypto down 3%. Wow. That is a signal. So the policy decision is coming up for the Fed. This does have a correlation where risk appetite is. With Bitcoin going down, that's going to be kind of a initial tell that maybe we are going to open in the red. It looks like we are headed into the red. Good call, Paul. And yep, we're going to be opening in the red. All right, well, get your capital ready. Get it ready to deploy, because if stock prices sell off, might be a good day to buy. I would just be patient because we really rallied back pretty well, and it might be, if we start a sell off, it might be a week-long sell off. So I'd probably want to wait. Dollar cost average in, kind of slow play my investing this week. We're coming off a really positive week is what I'm saying. So that comment I would put out there. But it's interesting that we're going to have a red Monday following a super good week last week. All right, so let me finish some typing here. Wanted to save some work I had going earlier. All right, so if December ends red, yeah, it's true. The Santa Claus rally, they always talk about it. And I mean, if the Fed moves interest rates down, I don't see why we would have such a sell-off month, but we'll see. I think if we have some bad news in the AI front, like OpenAI gets themselves into some trouble, or some controversy comes out of OpenAI, that might be what sends us lower. Crude oil is up. I can never understand why, but oftentimes oil prices will go up and stock prices will go down. I have never kind of understood the correlation between the two, but I'm seeing it today. So, Michael Anthony, good to see you. Bitcoin was just a dead cat bounce. Okay. Maybe. If we go down lower, I wonder how it's the charts are going to look. Right now, the S&P for the 1 year, it's just really gone up ever since the whole tariff fear. It's gone up nicely. No real big pullbacks. This one was a 5% pullback. Then the market regained it all back. So what are we going to sell off? Like 2%? 3%? This market doesn't like to sell off for long periods of time. That's what I've been observing. So that's why I'm thinking we're probably going to just, worst case, we're going to be even in December, but I could actually see us going higher by 2%, 3% in December. That's what I'm thinking. We'll see how it goes. So thanks for the comments, Michael Anthony. Good to see you. All right. So we went through that. I think we have a couple of stocks to look at. We've got Monday and then AVPT. Let's take a look at those. So Monday is a software stock and it's a smaller cap. They do develop software applications in the US, Middle East, Africa, provides work operating system, a cloud-based visual work OS that consists of modular building blocks used to assemble to create software applications and work management tools. From managing work to doing the work for you. AI work platform. Everybody's in AI now. 5 years ago, nobody was in AI, but now everybody's in AI. So these guys do, I guess they're like a workflow tool, helps you have workflows within the company and have the software really support the way you run your business around projects, marketing, sales, operations, and so forth. Project oriented around software development, IT, and support. So it's a little different, but similar to softwares that help businesses run their operations. These guys are discounted. Spoiler alert. I've valued this company before. It's a small cap, 7.4 billion with revenues of 1.17. The PE for 2026, 31.95. The stock has not performed. The market's selling off software stocks. It's like we're afraid that AI is going to unravel this whole AI space, kind of redefine how software companies ought to be run. And it's probably going to disrupt these players. Maybe. But when you look at their revenues, these companies continue to grow nicely. Okay. Very nicely in the case of Monday. 26% growth. It's not a tiny business. They're getting to $1 billion in revenue. They've gotten there. And when we look at their, let me go to the trailing 12 months. Gross margins, 89%. A lot of money left on the table after their cost of delivering that software as a service. And free cash flow margin, 28.6. So these are fantastic numbers. Fantastic growth, fantastic margin, fantastic free cash flow. But the market's not buying them. I'm waiting for the market to realize software companies are a good investment. I already own some bigger software stocks, but should the market, start buying software stocks, I'm going to buy Monday.com, maybe Bill.com. They're discounted. I can go down the list. Look at Adobe discounted, Figma, not so much. GitLab's discounted. CRM is discounted. All these software stocks are discounted. So I'm waiting for the market to show us that, hey, we're going to start rallying around software stocks, and then I'm going to jump in with more capital. Right now, I'm in small position in Salesforce, small position in Adobe. I have DocuSign, Zoom, Fortinet, Intuit. And all those positions, none of them are big. And collectively, they're maybe 5% of my portfolio. All those companies, if you aggregate their value. So Monday, I'm waiting. It's discounted. It's a good idea, but I don't know when they're going to start rallying. The market does not want to buy software stocks. That's just the reality of the market we are in. So AvePoint is the data management platform. I haven't heard of these guys. So software, but they're more of a data platform play. It's data management software. So it helps you if you're running workloads across Microsoft, Salesforce, Google, AWS, Box, and so forth. So a pipeline to move your data across all these different clouds. Again, sold off. $2.8 billion market cap. Revenues almost 400. P for 2026, 35. Company's growing. Quarterly, 23.5. Now, Monday's growth was better, and it's a bigger number. But this is good growth. It's not bad. Gross margins, good. Mondays were better. And I think Adobe's are way better. Free cash flow margins, good. This is discounted. But again, coming back to what's the market buying? It's not buying a lot of software stocks. So we got it. I'm waiting for the market to show it's going to buy software stocks before I jump in head first, because I'm showing you company after company where the market's not buying them. It's pretty amazing if you ask me. So that's where I'm at with AvePoint and Monday.com. Good companies, just the market will not buy them at this time. So we've covered a lot of ground. We've covered QXO. We also covered CIFR, which is cipher mining. We covered Nebius. Nebius, exciting stock. It was good to look at these stocks. Iren, it was quite shocking to see that only a tiny bit of their revenue is actually coming from cloud infrastructure. That was eye-opening for me. I don't know about you guys, but that's why we look at the financials. We don't just hear the stories and go, oh, let's jump in head first. It's important to look at the financials and get to know the company so we know what is going on with the business. Are they truly operating great, or is it just a story that everybody's investing in, jumping in head first? I think it's more of the latter on Iren, NBIS, and CIFR. All right, so yep, we're looking red. It's looking red. Oh, well, last week was great. Guess we're going to go down a little bit. So you're watching Bloomberg. I don't know. I don't see any big factors that are really concerning. I mean, the interest rate reduction is good. I think the sell-off that we saw in November on some of these high-priced stocks was good. It's discipline that the market needs. Sell off some of these really expensive stocks that are just too expensive. And that was, I thought, healthy. It was productive. Here's the 1 week, right? So some of the really expensive stocks at one point, the AMD was sold off big, like 25%. Nvidia. So you think Bitcoin can hit 75,000 per coin, huh? We'll see. Could happen. You heard it here first, folks. See, this software space, it was much bigger in the past. And now the market's made these sectors or these industries huge. Google's gotten massive. How big? I wonder how the list of the biggest, most valuable stocks is looking. So it looks like Nvidia's at 4.3, Apple is at 4.1, Google 386, Microsoft 366, Amazon 2.5, Avgo. Look at this PE ratio. Whew, expensive. We'll see if they can hold on to that market cap and stock price. I don't think they're going to. All right, so that's what's happening there. Looking at sectors, healthcare over the 1 month did well. Let me see if this is refreshed. Make sure. Yeah. So in the month of November, healthcare did really well, 8.65. Financials did okay. Technology had that pullback I was talking about. Industrials pulled back. Discretionary pulled back. Materials had a good month. Communication services, thanks to Google, had a really good month. Real estate pulled back. Energy had a good month. Consumer staples had a decent month. So this month here, it looks like healthcare has been working. Year to date, looks like materials is the top industry. It's a small industry. Market caps are much smaller than technology. Over the 5-year, of course, technology is number 1. Energy, number 2. Communication services, number 3. So we'll see how things sort out. So you avoided buying a Beamer. All right. Well, maybe if things crash and you wait 6 months, you can get a really good deal on one. All right. All right, guys. So if there's no other requests, I might shut that stream down because I have run out of content. So last call on stocks before I shut it down. Looks like we're going to go down. Yeah, why is everybody all negative? I'm positive, man. I think we're going to rally higher in December. We can have a couple red days. Nothing to be shocked about, to be overly concerned about. We'll see how it goes. Yeah, the last 3 years have been phenomenal, right? Really good. Yeah, the last 3 years have been crazy good. And, it was 3 good years to just make your portfolio go high. Sorry, guys. Call from my son. Just took it real quick. Man, streams going places here. All right. So, yeah, real estate is pretty dead, especially residential. There's not a lot of transactions. Maybe with low interest rates, it might go up. And yeah, if you're looking to invest in real estate, it is a tough market, man, because investments in real estate, I don't think are all that promising. They're, I don't see how you can earn a really good rate of return. It's just tough. All right. So let me see if I've got any ideas on stocks that I want to look at that I think are stocks that I want to keep my eye on. So over the last week, looking at my portfolio, Oscar had a phenomenal week. And the 2-week looks good. Of course, Oscar had that really good news. So that's probably going to keep going higher. And if we get that news out of the U.S. government that they're going to do the subsidies for health insurance, I think Oscar's going to do great. Robinhood had a very good 7-day. But if Bitcoin goes down, I think Robinhood's going to be under pressure. Let's see if Robinhood's selling off in after hours. No, it's doing okay. With Bitcoin down, huh? Interesting. Usually Bitcoin sells off, Robinhood follows it. And what about Coinbase? Coinbase is up. Surprised. Is Bitcoin still down? Yep, it's down 3.3%. Interesting. All right, so going back to what's been working, Reddit's been red hot, man. I really like Reddit. I like how they're growing. They're really growing their revenues. Looks like it's going to trade a little bit higher. And looking at the last month, you see this rise here. Man, I bought Reddit shares, bought Reddit shares, bought Reddit shares. Every time this stock sells under a particular, price, I have a valuation on it. I just buy Reddit because it's such a good growth company. 61% for the last full year. The quarterly, look at that, 68% revenue growth. Phenomenal. And you look at their profitability, really good profitability, 91% gross margins. They're profitable. Free cash flow is coming out. So Reddit's a real special company, $41 billion in market cap. This is one of the stocks that I just want to look for spots to buy more shares. It's been a winner. I've done well with it already. And the stock, really offered good times to buy it here. The market, after it IPO'd, it really ran the stock up. It came back down. And this is the stock one of the stocks this year that has really, really been a winner for me. I accumulated it and just saw it run up. And then it came back down. Their earnings were really good, so their valuation went up, and I bought more shares. And I am keeping my Reddit shares. If they keep growing their business, they keep at this high growth rate, this is going to be an awesome stock. So go Reddit. Nicely done. AppLovin's been screaming up. And AppLovin's hard to catch it discounted because it's just been moving higher. But every time it sells off, I am in. And it had this nice little pullback. And I know that some investors were getting a little shaken off the stock, and I bought more shares. Glad I did so. Good time to buy, and it rallied higher. It looks like it's holding its price from Friday, at least in the after hours as I speak. So AppLovin's been a really good stock. And this one, again, really high growth stock. The quarterly looks even better. 68% revenue growth. It's pretty much doubled. If you look at the trailing 12 months, and it does so by making a lot of money. Gross margin 79%, profit margin 44%. Isn't that incredible? So really, really good stock. I love AppLovin. Look at these fundamentals. Awesome. So every opportunity I get, I'm going to add AppLovin. And it's hard because the stock rallies and a lot of investors pay attention. But every time it has these nice little sell-offs, I'm a buyer. All right. So looks like the chat is pretty active. That is great. I don't see any stock requests. And if there are any, You guys know the rules. If you're a member, pop it in there. If not, give me a $5 super chat and I'll take a look at the stock. Until that goes, eToro, it had a nice 1 week run, up 14%. It's growing really well. It's under, I think it's unappreciated. So this stock here, it IPO'd and it's been selling off, but it's begun to rally. And this stock here, it's $3.5 billion in market cap. That's really small cap. And it looks like, Mark, you like Reddit. You like Dave. I like Dave as well, by the way. I like Reddit a lot. eToro is growing well, makes money, really low PE. It resembles the business Robinhood has, Charles Schwab. And I've done great with Robinhood. I've done great with Futu in Asia. Looking to replicate that performance with eToro in Europe. So this one here is a pretty good stock. I'm going to keep adding to it. It's a small cap, so I've got a small position, but I'm growing it. And if this thing keeps going up, I'm going to keep feeding it capital because I really like their growth rate and I like their profitability. Their profits are good. Cash flows are great. They're in a brokerage business, so you're not going to see massive margins, but they are profitable. They're generating cash in abundance because the cash flow they generate in proportion to their market cap is very high. So eToro, solid, small cap. I don't have a lot invested in it yet, but I'm going to keep investing in it. Coinbase had a good week. Astera Labs had a great week. It ran up with Broadcom. So Astera Labs, Broadcom caught a really nice rally, and so did Astera Labs. It was up 11% in 1 week. This is a high growth stock. It's a small cap compared to Broadcom and Nvidia. Man, this thing's a real rock star stock. And I bought it here and it really rocked up and it's been, slowly coming back down. I need it to be at around $120 a share before I'll buy more shares. Right now, I'm going to hold a modest position of it and just ride it out. And I also own ASML, TSM, Qualcomm, and a tiny position in Nvidia. So Astera Labs has been awesome. ASML was up nicely last week. Good to see that. New Holdings was up. Meta was up. Man, that one's easy money. Every time Meta sells off, I buy. Zoom was up nicely. Zoom had that really good earnings. Bitcoin was up last week, but it looks like it's under pressure now. And then Google was up nicely last week, and it's had a phenomenal couple of months. So I've got some good stuff brewing in my portfolio. Hopefully you are looking at some good gains as well. All right, so the futures are still negative. Hopefully they point higher at some point. All right, all right, guys. So I'm going to shut it down. It was a pleasure to be with you, and wish you well this week. We'll see where the market trades. Hopefully, it goes higher. We might start off a little bit red, but I'm thinking it's going to trade higher in December. We'll see where it lands. With that, everybody, have a terrific Sunday night, and good luck with your investments this week. Last half, you are welcome, sir. Thanks for joining. Michael Anthony, good to see you. Mark, thanks for hanging with me. Awesome to see you. Adam, good to see you. Neil, good to see you. Thanks for joining. And see who else joined. Man, a lot of people joined tonight. Paul, good to see you. Paul's a member. I appreciate it. Mark, again, thank you. Broccoli high kicks. Good to see you. The Elder, good questions tonight, man. Good stocks. And Herdo, thanks so much for the super chat, man. Thank you. Hopefully you found my analysis of Pfizer interesting. Thank you, sir. And Bo, thank you, man. The regular. Thank you for the super chats. I appreciate it. Jeff, thanks for joining. And if you want to join as a member, just go to my YouTube channel. You'll see a join button. You can click on that and get all set up. Hopefully you find my content interesting, valuable. You become a member and get value from the channel. James, good to see you. Thanks for joining. And we'll see you, Herdo. Great to see you. Have a good night. All right, guys. Have a good night. We'll catch you on the next live stream.